Hey everyone, welcome back to Corporate Decoder. Today we're diving into a 10K filing, and let me tell you, it's less about environmental solutions and more about, navigating some stormy financial weather, if you catch my drift. So what's the T? This is DIRTT, a company that designs and makes cool, adaptable interiors for offices, hospitals, schools, places where you don't want things to be drab. They're trying to be a leader in industrialized construction, a fancy term for making building interiors more like putting together Lego sets. Right off the bat, we see this as their annual report, a Form 10K, for the year ending December 31, 2024, marked with a big X. This means it's the full story, not just a quarterly update. For the fiscal year ended December 31, 2024, the aggregate market value of the voting and non-voting common equity held by non-affiliates was roughly $32.8 million. Now let's talk about what this report actually says. Buckle up, because it's a roller coaster. They're looking to their proxy statement about their upcoming annual and special meeting for shareholders, which will be held on May 9, 2025. This is where they'll hash out the important decisions. DIRTT believes that focusing on being smart with their money, always trying to get better, and being careful with investments will make the company more valuable for everyone, employees, clients, even shareholders. One big change, they're no longer trading on the Nasdaq. Now their stock is on the OTC pink tier under the symbol DRTTF. That's like going from a major league to, well, the minors. Not great for visibility or attracting big investors. DIRTT is a single reportable segment in the United States and Canada. Their main products include solid walls, glass walls, and combination walls. There's also leaf folding walls, which is a pretty cool system that can quickly adapt spaces, as well as electrical and networking solutions. These products are made in their factories in Calgary, Alberta, and Savannah, Georgia. DIRTT wants to make sure that their products are environmentally sustainable. The company is concerned with materials selection, efficient operations, and a system designed for future adaptability and long product life cycles. Also, the company is certified to handle materials with FSC. FSC is the Forest Stewardship Council, and they make sure that timber companies are using responsible practices. They mainly sell through construction partners. These are independent firms who work in conjunction with local DIRTT sales representatives. At the end of 2024, they had 71 partners and 39 sales representatives across North America. This method of sales allows them to spread awareness of DIRTT without having to have sales representatives in each location. Now let's talk about the stuff that makes these adaptable spaces real. Aluminum, hardware, wood, and glass are key. Aluminum makes up a big chunk, about 35% of their material costs. They're working on making their software, ICE, even better. In 2023, DIRTT signed a deal with Armstrong World Industries, AWI, where AWI owns a 50% interest in the rights to some of the ICE software. In return, DIRTT got a cash payment. The market for interiors is really fragmented, meaning there's a lot of players and everyone's fighting for the same slice of the pie. They compete with conventional construction companies, individual contractors, and even furniture makers who are starting to offer wall solutions. But if these things go south, DIRTT could have some major problems. A lawsuit, for example, could cost them a lot of money, take up a lot of time, and make it harder for them to run the company if they do not win. They might not have enough cash to pay their debts. The price of their stock could go down, and it might be hard for investors to sell their shares. Here's a juicy one. DIRTT's co-founders are now running a competing business. That's right, they know DIRTT's secrets, customers, and strategies, and they're using that knowledge against them. DIRTT is actually in litigation with these folks over this competition, as well as the use of company secrets. The company's management is working on a transformation plan to advance the business and grow revenue and manage profitability. There's no assurance that successful implementation will lead to sustainable, profitable growth and may itself be disruptive to the company. DIRTT needs to keep an eye on environmental, social, and governance matters, or ESG. Rules are changing, and they might have to spend more money to follow them. If they don't, they risk losing business from customers who want sustainable choices. Another factor that can impact the company's operations relates to the prices of raw materials, specifically aluminum, glass, and wood. The The cost of these commodities can fluctuate due to changes in global supply and demand, inflation, speculation in commodities futures, and the imposition of any new or changes in existing tariffs, embargoes, or other trade barriers, which can also interrupt. DIRTT relies on a limited number of outside suppliers for certain key components and materials. Any failure or delay in obtaining the necessary raw materials or components in the quantities and quality required may result in increased costs and delays in manufacturing or distributing our products. They try to protect their ideas with patents, copyrights, and trade secrets, especially around their ICE software. But they might get sued for using someone else's ideas, or they might not be able to stop others from copying theirs. This can take up time, money, and hurt their business. DIRTT takes information security seriously. One of DIRTT's cybersecurity employees has over 20 years of experience in cybersecurity, multiple industry standard cybersecurity certifications, and extensive offensive and defensive cybersecurity tactical skills. The ERM of the board of directors oversees risks resulting from cybersecurity threats. New tariffs on goods coming in from Canada and the resulting retaliatory measures may affect our ability to import raw materials and sell our products profitably. The company did not have any impairment indicators for their non-current assets as of the end of 2024, such as non-current assets or goodwill. DIRTT has announced various voluntary ESG targets in their annual Environmental, Social, and Governance (ESG) report outlining commitments to sustainability. The ESG report shows their commitments to health and safety and social initiatives. In 2024, the company repurchased debentures through the issuer bid, debenture repurchase, and debentures NCIB. These actions decreased the number of outstanding debentures, which could decrease liquidity in the market of the debentures and increase the volatility of the prices at which they trade. They have a significant court case coming in Canada in 2026 against Falkbolt and the former executives and are currently pursuing damages which could exceed $50 million. DIRTT values their employees and has put measures in place to enhance the level of engagement and satisfaction of its employees. As a result of this, they had a total recordable incident frequency, TRIF, of 0.82 in 2024, more than 80% below the industry average. We have the issuer purchases of securities table, which shows how the company bought back some of its shares. It is not common for a company to have a market cap so low and be buying back shares, but it seems like there are some internal events that make this possible. The normal course issuer bid for common shares was announced on December 18, 2024, and the expiration date is December 19, 2025. Let's dive into the numbers. Remember, these figures are in US dollars unless otherwise stated. Total revenue was $174.3 million, a decrease of about 4% from the previous year. Gross profit increased to $64.4 million, with an improved gross profit margin of 36.9%. Net income after tax was $14.8 million compared to a loss of $14.6 million last year. Adjusted EBITDA for the year ended December 31, 2024 was $15.4 million. As of December 31, 2024, they had about $29.3 million in cash. This shows that the company is improving its balance sheet through cost-cutting measures and also the recent capital raise it completed. Also, the company is undrawn on its Royal Bank of Canada credit facility, and their outlook is positive, expecting $194 million to $209 million in revenue. They've also been doing some spring cleaning, selling off non-essential assets and focusing on what makes them money. This makes their financial footing more stable but reduces their footprint. They mentioned that the supportive macroeconomic environment in the United States may increase demand for their products. If raw material prices and labor prices stay high, it might hurt their profits, which is something to watch out for in 2025. On February 11, 2025, we announced a price increase of 5% on all orders placed after March 18, 2025 to mitigate the impact of these rising costs. Ultimately, DIRTT is saying they think they have enough cash to keep going for at least the next year, but they have had negative cash flow for prior years, including the years ended December 31, 2022 and 2021. So what does all of this mean? DIRTT is at a crossroads. They're trying to find a way to make prefabricated construction popular and efficient for their users. They are investing into the company and have improved key processes and technology, but there are clear external factors that could hurt growth. These factors include potential future regulations, economic factors such as tariffs, high aluminum and labor costs, and not having as many sales. Also, they are still in litigation with their founders, which also might harm the company. However, all of these factors could make it easier for a bigger company to swoop in and buy them out. Thanks for watching. Don't forget to like, subscribe, and let me know what SEC filings you want decoded next.